Okay, so today I'm going to show you how I caught this 1 to 9 risk to reward short trade. Okay, so let me start off with my buys. So in a 4-hour time frame, um, price was in a drop that was in a downtrend, and okay, as you can see, in a downtrend. And in a 1-hour time frame, the market opened up, and if like market opened up and sweep out these 1 hourly highs, and if there's like 5-minute retrace to it, I would sell to this um the higher time frame 4-hour Ferrari gap. Okay, so my expectation was that if market open push higher and give us some lower time frame reaction to the downside, I would sell. If price push lower and sweep out these 1-hour lows, we'd long to those highs. Okay, and the one thing is that uh yesterday at 8:30 we had the news, Sora. Um, Average hourly earning percentage went up, which corresponds to the inflation is rising, so which is good for the dollar index. And NFP change, the number is saying red, but the previous month it was 89,000. Okay, now even if it's red, it's like 50 uh 53,000 more um job space. Okay, even though forecast was too high, even though price was a little bit lower than the forecast, it's way higher than the previous one. So that's a bullish for dollar index. And unemployment rate uh, came out to be less than the previous one. So the three influential news all came out as a bullish for dollar index. As a result, um, indices will drop. Okay, but at 8:30, in the indices um, gain momentum to the upside to sweep out these 1-hour highs, and then after that, price just followed their all three bearish news for indices. All right. So let me show you the executions. All right. So after the 1-hour time frame high sweep, 5-minute structure broke structure to the downside, and I need a 5-minute retrace. Okay, you can't just sell immediately at this higher time frame liquidity and then just enter off of 1-minute break. No, that's not how things work. Okay, I need to wait a 5-minute retrace. Okay, bro, this is perfect example. Look at this. 5-minute broke structure to the downside, 5-minute retrace to exactly at the 70.5% retracement level, which is this one. Look at that, 70.5% retracement levels, and price rebalance this inefficiency. And if I need to talk, there's like breaker block, okay, and there's order block, equilibrium, optimal trade entry, Ferrari gap, all the confluence is right there. Okay, and then my entry was on a 1-minute time frame, which is on 1-minute broke structure to the downside. I took short position. Okay, so why I took this low and not this low? So what is low? Low is red candle and green candle. So what about this one? Yeah, there's a red candle, but there is no green candle. Okay, so this is not low. The previous one is red candle, right, represent black. Okay, red candle and then green candle. So that's a low, and price broke structure. I took short position there, and higher time frame sweep. Where is the next draw on liquidity? Which is the 8:30 news equal lows. Okay, so I took take profit at these levels, and then I just let it run to this 4 hour higher time frame for Riga, right? Okay. So what happened in this example? Okay, at the 11, there was a, what was it? I think it was FOMC member Waller speak. Okay, I think they said something really bearish for dollar, but like this is seek and destroy. Why seek and destroy? Let me explain you. So why after huge sell off this huge spike move up to take liquidity? Why? Because there are a lot of people who took short position off of trying to catch these trend lines short. Okay, so there are people who took short off of here and above highs. Okay, what are those? That's a buy order. Okay, after this high got swept, there are sellers protective buy stop, and there are the the people that are willing to long position. All right, as you can see, and then in the result, this spike move up took short positions stop loss and induced buyers into the wrong direction. Okay, as a result, those buyers will put their stop loss below there, and price just reverse it to the downside and hit my take profit too. Okay, so this was really good trade. Okay, I rarely take this trade. Okay, this high risk to reward, 128.9, and then price even went lower. Like price even pushed lower into this equilibrium of the Ferrari gap. Okay, yeah, even if I let it run, this would have been like 1 to 11 risk to reward trade, but 1 to 9 is very, very good risk to reward. Okay, so this was a good trade, and okay, so why price just disrespected this 15-minute bullish Ferrari gap? Because the all three news came out bearish for indices. Okay, even despite the being bearish news, price pushed higher and swept 1 hour lows. And where do they target? Higher time frame liquidity. So why do they give a fuck about 15-minute bullish Ferrari gap? And that does not make sense. All right, price just, yeah, kind of one minute bullish candle, but demolished that to the downside, went for these equal lows, and went for eventually to this higher time frame, uh, which is 4 hour bullish Ferrari gap. Okay, so yeah, improvements. So how can I improve on this? So I know it's all in hindsight, but after seeing it in the hindsight, like there was some potential trade to take here because this spike uh force the people, those who short here. Okay, so short positions no longer smiling. Okay, because their profit is here. Okay, so short position traders, short position holders, they forced out of the market, and above these highs, where, what's going to happen? So there are people willing to long. Okay, willing to long all the way up here. So in the result, there will be a lot of liquidity below this low. So prices love to sweep those. Okay, and then eventually price swept it. Okay, so yeah, maybe there's a break of structure, but this entry would against my rule because we are below the equilibrium. So what's below the equilibrium? That's a premium price. I mean that's a discount price. Sorry. So I don't want to sell at discount. I want to sell at premium. But this 1 minute engulfing candle is enough? No. Okay. This boss is enough. Yes, but where we at? We at discount, not at premium. So that's not valid. All right. So yeah, and then after that, price just chop, chop, chop. Look at that, chop, chop ski. Price just chopping around, and then price finally broke through that. Okay, so this is how I caught this trade. Yeah, that's pretty much it. See you guys.